All right, everybody, welcome back to another episode here on the Dividend Doggo Show on YouTube, and I'm going to be bringing you in for the weekly portfolio review. As you can see, we are significantly down this week. If you're looking at these numbers pack, the portfolio took a pretty big hit this week, and we are in the red. So I'm going to dive straight into it. We are in the red by $16,990.65 total. We did earn $1,583.52 in dividends. I believe that is AbbVie paying out. So we are going to go take a look and see what sectors we were down the most. Obviously, if you're looking at the screen right away, you can see that it's definitely going to be healthcare. So it looks like AbbVie hit its peak and definitely came down off of the high numbers there. It was down 5.54% this week alone. Obviously, Johnson & Johnson was also in the red this week, but we're down a total of over $10,000. And you can see that AbbVie, we're down over $11,000. Sorry, you can see that AbbVie paid, we locked in its dividend for this week, which means that in about a month or so we'll be getting that dividend. So a little bit of the drop might be the fact that it's registering the dividend drop, but also I think it just overall had a little bit of a decline this week after hitting what crazy all-time highs. It's just been on a tear, so I'm not too worried about this overall. We'll see what it looks like going into once this dividend settles into the account. We will see kind of what I want to do with that, but overall that is a huge dividend payment coming in. Utilities was down also a little bit this week. It's not really that much, but Duke was 0.01% down, which is like 50 cents. And then Vistra was down 0.37, which was about $560. Not too concerned. That's just kind of regular fluctuation, to be honest. Overall, the not too concerned about that. Consumer was up about 1.41%. Now, this, I don't really know why there was a pretty hefty jump for Target, and then, Altria and Coca-Cola both ended up over 2%, almost 2.5% for Coca-Cola, which is great. Home Depot was in the green. Costco was down a little bit despite having an amazing set of earnings, in my opinion. They announced a dividend raise of 13%. Absolutely fantastic raise. I'm excited to get that 13% raise. And honestly, if we start seeing Costco dip some, I'm going to be pretty excited, because every time I've gone to Costco in the past 2 months, it's just been busy. Things like shopping is just like back in full swing at Costco's around me. So if they're like that around you and you shop at Costco, let me know in the comments down below if it's crazy busy. Target was up 4% this week, which is fantastic. I probably should have done a pretty big buy on Target, as it had dipped a little bit, but Lowe's was down in the red, just 0.67%, and Pepsi down 0.38. So not big swings for those other ones, but man, Costco, if you could just like drop 30% for me for a month or so and let me drop some money in you, I would love that. Como Money was down overall 0.72. This is a little bit Berkshire Hathaway and quite a bit of SCHD. So you can see those numbers there, just barely in the red. Then we've got Finance being down another 2.87%. Now, I looked at the Ally information that was posted this week because they had their earnings this week. Ally's earnings looked pretty good to me. They looked pretty strong overall. There's a little bit of concern with, automobile stuff going on, because that's the bulk of where most of their income comes in from. But overall, it looked pretty decent. Again, not really too worried about this. If this does keep going down, you guys saw me buying this last week. I'm probably going to be spending some of that future dividend money on buying some more shares of Ally, especially if it keeps going down at this rate. JP Morgan also going down. Bank of America down 4.6%. These are positions that are going to start getting back toward buy territory for me, especially JP Morgan. Let's take a look. My cost basis on JP Morgan is 123. So we're at 126 right now. I'm pretty comfortable getting that 3% dividend yield off JP Morgan in this 120 range. I'm happy to add. I wish that I had added a bunch when it was back in the 90s. So if we continue to see these finance pullbacks, I'm going to have to be really honing in with a microscope and picking out which of these stocks I really want to buy. As you can see, Bank of America is still significantly up for me from my cost basis being right around $26.25 per share. So it's still at 37.57 right now. That's not quite as close as JP Morgan is. Obviously, Ally is below my cost basis, so I'm averaging down anytime I buy Ally right now. OZK ended the week at 40. I was buying it at 32, so I'm pretty happy to add anytime this stock is yielding about 3%. But my average being 32, it would still be raising the cost basis up. Hingham, still well above my cost basis, 341 per share. It was 302 when I was buying it. So that's something to keep in mind. Hingham is more of a growth position. It is a dividend growth position. They've been growing the dividend, and I like them, but they got expensive really quick, and they spiked. They spiked up and then came back down a little bit, but we're still up overall, what is that, 14%? And we've earned some dividends on it. I'm excited to continue to hold them. And if they get closer to that 300 mark, I will definitely be prioritizing adding some shares in, because that was a pretty strong purchase, in my opinion, especially down below 300 or at 300. Tech is just doing its thing and collapsing. Microsoft, super quality stock, down 7% for the week. Yeah, not much to say about that, but these will come back into a buy territory for me. I like them in December when I was buying them near these highs, the most recent sets of highs, and Apple down 4%. Google, I'm still liking, even at its current price. I had just started adding to Google, so my cost basis was $2,700 and it's now $2,500. So luckily, I don't even own a fraction of a share yet, really, to be honest. It's a teeny weeny position for me. I would like to get it a little bit higher, so it coming down makes me just want to buy it a little bit more and makes me even happier to build up the position now. Let's see, Industrials was in the green for the week. Caterpillar being up 5.5% for the week. I really should have built up this Caterpillar position to more of like a 10K position, $10,000 invested in it, because I do think that Caterpillar is going to rebound pretty heavily. As you can see, when I was buying it, it was $129 a share, and it's $227 right now. I think my yield is like somewhere at 3.4% or something like that with this position. Absolutely fantastic. We're always going to be doing construction and infrastructure stuff. Caterpillar's just one of those stocks that I got to wait for that to come back into closer to a buy territory for me to add to it. As monthly stocks, if you've watched these portfolio reviews, BST tracks all the technology stuff and runs covered calls against it. So it's mainly like Apple, Microsoft, Amazon, Google, and if those are down, it's going down too. This is a definite interesting buy territory. This is the first time in a long time that the price is below my cost basis on BST. For over a year, this stock, when I was buying it, it just built and I just held, and then it just started skyrocketing, and it went up and peaked here at like 50 300-ish, and then it's just kind of been trickling down. So this is one of those, this dividend yield isn't quite accurate here. I would carefully look at this dividend yield because I'm not sure if this factors that special dividend they just did. I say just did. It was in December of 2021, but overall, this is one of those that is a long-term capital gains. Always do due diligence when you're buying stocks like this because they do sell covered calls, and sometimes those gains can not be qualified for capital gains taxes long-term. So you always need to do your due diligence and double check. But as it's standing right now, I believe their dividends are fully long-term capital gains, which is amazing. The downside of BST is it has a really high expense ratio. And obviously right now with technology going down, you're losing capital money on paper right now, but you could get a significant amount of that back. This stock can grow in capital gains if those technology stocks do a decent rebound. Obviously, there's like the quest to find value stocks right now. So this is one that I'm going to keep looking at and watching as it keeps dropping a little bit because I do like this stock BST quite a bit. I've held it for quite a long time. You can see that I've held it since April of 2021 is when I first started putting money into it. And I wish that I had put more back then because it had just printed money. And it had gone up pretty significantly, but now it's down just barely below my cost basis. So as you can see here right now, we're looking in the red just a little bit here, $900 in the red. We had earned $331.97. This is a monthly payer too, which is one of the attractive things about BST. I'm not trying to sell you on buying BST shares. I'm just saying that it's below my cost basis now. All right, sorry about that. Had to do a quick cut there because M1 Finance logged me out. So overall, we are looking pretty good as far as the portfolio goes overall for the week. It being down for this week, 16,900. As most of you know, last week it was up like 20 grand. So it's one of those things where we are in a very volatile time, and you have to keep that in perspective. That you are always going for the long term. Are you setting your goals? Are you achieving your goals? As you can see, we jumped from 44,000 in earned dividends to now 46,000 with this week's dividends coming in is almost $1,600. That's absolutely fantastic to me. If the market fluctuation is going to get lower for a little bit of time, at least we're going to have that dividend income rolling in to buy more shares of stock at a lower price and increasing. It gives it that more buying power. That's going to give us more dividends going forward so we can compound the snowball even quicker. If the portfolio does start to go down a little bit, we can look and target those stocks that are really hit hard and potentially get more for bang for our buck when we're spending our money. So the way I'm looking at things right now is trying not to be too harsh. It's down 2% this week. That's okay. We'll see kind of where the next week goes. We had a short trading week this week. I was hoping to do a buy order on Friday, and I totally forgot that it was Good Friday. Didn't even realize it until someone mentioned it Thursday in one of the stock channels that the market was closed tomorrow. And I was like, oh, well, crap. I did not set up any buy orders. As you can see, we got some cash into the portfolio. We got a little bit of dividend money and a $10 referral fee. So M1 Finance, after many months now, has finally changed over to only giving you a $10 referral instead of $50. So keep that in mind, that if you are looking to sign up with the links below, they have changed their referral plan, and they are focusing more on getting people to move money over via transferring an account. As you can see here, they put a transfer button on the page to try to entice you to do it, which just seems a little bit crappy to me. But overall, the current promotion is if you fund with 100, they give you an additional $10, and then they give the person that referred you $10 as well. So hopefully we'll see a change to that and go back to a little bit higher value. I really liked it when it was 30. I loved it when it was 50. A lot of people had used the referral link, and I really greatly appreciate that, because that, funds extra buys in the portfolio and helps me get to that dividend income goal of $80,000 per year just a little bit quicker. So every single one of you, I appreciate all of you watching thus far. If you made it to the end of this video, I really do hope that you and your family, if you celebrate Easter, have a great holiday. As you know, we don't have any kids, just puppies. So we are going to do some type of a treat hunt for Easter with the puppers out in the yard. We are going to hide treats all throughout the yard and then let them go and let them see if they just start finding random treats all over the yard. So it should be pretty entertaining. I might try to make a little video of that to have for next week's video. So if you guys want to see something like that, let me know. I will do a little short clip and see how the dogs go through the yard finding all the treats for this weekend. So thank you very much for watching. I hope all of you will have a fantastic week. Try not to be over emotional if your portfolio is down like mine is this week. Try to keep it in focus, that you're getting a better bang for your buck when you're buying your stocks for next week. Choose your stocks wisely and carefully as you can, and try to buy quality where you can. Thank you all for watching. I appreciate every single one of you members of the pack, and I will be back with you for another video here on YouTube very soon.